QE, rate cuts, TLTROs, special lending. Are we trapped in the history of special measures? Is that what's containing our viewpoint of what the ECB could do? We're trapped in a prism of history.
Well, in the first look, of course, the conventional measures, they are exhausted. So this is a fact. Interest rates are zero or even below that. So we have to go in the area of unconventional measures. That's the starting point. But the other one is also like looking at the nature of the crisis and the nature of the demands for monetary policy. They are much more in the direction of providing liquidity and ensuring that credit flows are not broken. So it is a special situation, not only due to the starting point for the ECB, but also the demands from this crisis to monetary policy are a bit different than a usual economic downturn where interest rates do it. So here the ECB is not only trapped, but probably is also a chance to use some of their unconventional measures they already implemented and tailor it to the current crisis situation.
So negative loan rates to banks, so long as they're passed on to the real economy, is that a construct that floats?
It floats, as you said, as long as they pass it to the economy, and this is the challenge for the ECB. And there's one instrument which is always in the media, which has lots of attention of financial markets, and this is actually the negative deposit rate, which is a burden for banks. So the big question is really, will the ECB to satisfy financial markets by lowering or by increasing this burden for banks, and at the same time trying to cooperate with banks to free some credit to banks? So this is a big question. We hope that it goes rather via the targeted loan facilities to small and medium-sized companies, and then let's see if this is really arriving at the real economy.
David, given all of the criticism about another rate cut, deeply negative rates for banks, reversal rate of negative rates, I isolate Christine Lagarde, but can the ECB afford not to cut rates today? How bad an impact would that have if they don't cut rates, even by a token amount?
Well, that's indeed an interesting question. I would say the ECB or Madame Lagarde has done the whole press conference to explain this move, and they are not only people in the market which demands more negative interest rates, but there's lots of voices which analyze and say negative interest rates are probably rather a burden for the economy than really help to stimulate activity.